Hello everyone, I am YouTuber Crypto. Let's take a look at today's market. In the 4-hour chart, we're still observing this pattern. This pattern has another shadow at the boundary today, as you can see. Okay, let me clearly outline this pattern. All the contact points along the upper boundary are noticeable. There's no ambiguity. As for the lower boundary, there are also many contact points. Today we have this false uptrend. As you can see, that in this position, there is another shadow. Actually, we mentioned in the previous days that you must be careful of false breakouts because there have been too many false actions recently. You can review yesterday's video. I said that in the recent oscillation range, it is very difficult if we rely on this type of price pattern breakout and support and resistance analyses. Today, we have the same situation. It feels like we're going to have a breakout. But as you can see, the price has dropped back. Personally, I didn't open a position here. I will wait until it is really certain before entering the market. In fact, this pattern is gradually losing its effectiveness because patterns have a time limit. As we mentioned before, when a pattern reaches about 70 to 80% completion, the direction it takes is usually the most ideal. When it reaches about 70 to 80%, it is also usually the true direction. If the price makes a choice, when it's already very far along. For example, when the price reaches the end of this pattern, and only then decides a direction. This direction may be false. I believe this pattern must give a direction by next Monday at the latest. If there is no direction by next week, I will consider this pattern completely invalid. So actually, regarding the rise we had last night, and this drop today, the rise actually occurred during a holiday. When a price action happens during a holiday, especially in the form of a prolonged oscillation, and a direction needs to be decided, it becomes very unreliable. Why? Let's look at this. Let's look at the data. Let's look at the chart of the CME gap. Looking at the Bitcoin CME gap, the price is $29,725 on a 4-hour chart. It's the same even on the 1-hour chart. Therefore, if the price deviates too much from this level, or in other words, it has to return to this level during regular trading days, then there will be a gap. So we can look at this breakout. There are many suspicious aspects to this breakout, since it occurred during a holiday. Now, if we look at a smaller time frame, there is a small opportunity here. We talked yesterday about a price channel that appeared in 1 hour, and the contact points, as you can see, on the top and bottom boundaries are obvious. The contact points along the upper boundary, the contact points along the lower boundary. When the price breaks through this price channel, we can give it a try. Okay, it's considered a short-term trade. Is it worth making a short call now? Well, I think it's better to wait until regular trading days, Monday to Friday. Because, as we mentioned earlier, our gap is at 28,725, which is not too far from where we are now, right? Therefore, the rise and fall we saw were just a false action and a little noise. After this noise is gone, I believe the price will still be around this level at just over $28,700 on Monday. Now, let's take a quick look at Ethereum. For ETH, it has actually formed a head and shoulders pattern. The situation with Ethereum is not looking good. You can see here that on the Ethereum chart, we can draw a neckline. This is how we draw it. Once the neckline appears, we can draw a head and shoulders pattern. This is the position of our left shoulder. Then a head appears. After that, we have a right shoulder. If the neckline is broken, this head and shoulders pattern will trigger. Also, it has been brewing for a long time. Precisely 53 days. So, if it breaks the support level, and this pattern triggers, the resulting price drop could be very significant. Therefore, everyone should be cautious. Moreover, if we zoom in on the recent period, with the same time frame, we've been trying to break through around $1,930 twice. But they were both false breakouts. As you can see, the price cannot move up from this position The first one was a false breakout. In the current attempt, it's another false breakout. So there have been two false breakouts here. If the price continuously attempts to break a resistance level and has consecutive false breakouts, the chances of the bulls being defeated will increase significantly. Additionally, we're currently near the neckline of the head and shoulders pattern. So, everyone must be extra cautious. From the weekly chart, 1,930 is a significant support/resistance level. Why? Let's look. At this level, we can find that this level is a significant reversal roll. Judging from the contact points, you will notice that this situation is similar to Bitcoin's resistance, around 30,000, where we can see some support/resistance reversals at several points. The point here and here. Now, the price is being blocked in the same place, and we have had two false breakouts. Therefore, those who have long positions must be very careful. If you want to trade, whether it's derivatives or spot, you can click my Bybit link below. Complete KYC and deposit $500 and you can get an Ethereum position worth $1,000. BitGet also offers a $10 registration bonus. Alright, thank you. You're welcome to like and share my videos. And subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.